Welcome back, traders. It's Chris here. So we got another top trade review for you here. A couple days ago, Thomas, who joined us a few months ago and had just placed his first live trade after practicing on demo and building his price action skills, totally crushed it on his first live trade here. And so here's his post on the 26th of January, so just a couple days ago. First trade on live account, almost 150 pips in profit. He's got another trade that's open right now. So let's go ahead and jump into the actual trade here. And so if we look at this here, we can see his entry is about 76.03 and his stops above this about 76.33. We can go back here. This is kind of where he placed it. Maybe it's a little bit higher, 76.42. So we'll go with that, 76.42. So he's got about a 40 pip stop on this one here. And he's getting out around 75, let's say, I don't know, 27 and 75.33 on this trade here. And of course, he's got this sell that's currently open with profit already locked in. So let's go ahead and look at our chart now that we got the details. Just like all the other top trade reviews, we're going to analyze his entry, his stop losses, take profit, talk about things we like on it, and give some feedback on things we think are going to improve on it so that you learn how we trade, how we teach our traders to trade, and how you can make money trading here. So I'm going to pop up my chart on the Aussie yen. Here's his entry right here, and let's move the stop up a little bit, right about there. Okay. And here's his first two targets, and he's got another trade open that's right around here. So Aussie yen in a large corrective structure, we have this resistance right over here, and we have support from here and here. So you're in about 300 pip range, 280 pip range, roughly, nothing crazy. The market makes these recent swing highs, treats this level here, 76.05, as resistance. New highs, treats it as support again now, resistance, breaks through it, treats it as resistance, sells off. Now, if you look at this selling here, this is what's interesting. So you have impulsive corrective move, impulsive short corrective move, sharp exhaustion spike down, and then V reversal counter trend play. So V reversals are less common. It's a lot less common to see the market go down then slam right back up. Usually there's, kind of like a changing of the hands between bulls and bears, or in this case, bears and bulls. There's some profit taking, but still bears left in the market. Bulls aren't totally confident, so it's a slightly longer bounce. This one's super sharp. So that tells you that not only are the bears pretty much left the market really quick, but a huge amount of counterforce of bulls have come back in. So we have impulsive corrective move, make new highs here about 76.05. Treat as resistance, resistance, resistance. So resistance again. So he's got this level earmarked as kind of an important resistance level. Get a false break above it, but it fails to make it towards these prior highs here and then sells back off and now treats this as resistance. And then we get one more weak push. And once it sells back below, that's when he's getting in to get short on this one here. So he's taking advantage of a false break setup. And so he has, again, here a roughly 40 pip stop. I kind of see why he placed it there. To be honest, I think you could have placed it anywhere above these highs here. So anywhere between, say, 76.25 and 42. Granted, it doesn't seem like much in the context of this, but shaving off 10 pips on your stop loss puts you from a 40 pip stop loss to a 30 pip stop loss. So if you got a 150 pip target, you went from 40 pip stop loss to a 30 pips. So that's less than a 4-hour return versus a 5-hour return. So 10 pips makes a big difference in terms of your overall profitability here, especially since he's splitting it amongst two trades. There is that. I think he could have been a little bit more efficient. I think anything, right around here is fine. If you are wanting to give it a little more room, be a little more conservative, and you want to capture a larger move, then maybe that's intention. And so here I think is fine. But anywhere between, say, here and here, I think is kind of an optimization effort on this here. Now he's getting out here, and then he has another entry that gets out later here. I do see some of the logic in this. There isn't as much over here, but there is some historical price action here and here and here. On this leg down, this was the resistance before the next leg down, and it was resistance here. So I kind of see some context for that. I think he could have held on to a little bit longer. There really was no major pushback signaling like, hey, change in the order flow, change in the price action. There was a transition from, you have this kind of continual sell-off below the 20 MA, and then we have this transition. And so if he's trading on a momentum basis and he feels like, hey, this momentum waning is enough for me to be out, then I think that's fine. But if he's kind of trading more on a swing basis, then unless this kind of structure is broken to the upside, I think he could have held on to the trade for a much larger win, obviously targeting the bottom of this prior resistance here, which was the swing low that created the high of this entire move. So I definitely think there's some optimization he could have done on that. Let's take a look at his other trade. He has another trade running right now. So this one is currently short 75.90 maybe. Yeah, around 75.90. And he's already trailed his stop loss based on the gap. So let's go back to our chart, 74.90. I kind of get an idea on this one here. My thinking is this. I think a different way to approach this is, like, you've created a corrective structure here. So that's a pause in the price action. There's some profit taking. But other than a few bulls that try and push it, they really have no follow through. So there's not much strength on the side of the bulls. So I'm thinking once you get below this here, then you get back in on this floor of the corrective structure here and here. And you get back on this pullback here. It also lines up nicely with the 20 MA. So you get this nice confluence going on there. And then you put your stop somewhere inside the corrective structure. If you want a really conservative stop, you put it above the corrective structure here. That would put you at an entry about 75.04, and then you have about a 35 pip stop. And if you are targeting the swing low, that would give you about 90 pip target roughly. So you'd have about a 3R on that one there if you went for the really conservative one. If you go somewhere midway around here, then you get about a 20 pip stop on this one here. And for a 90 pip targets, it's about a 4.5R trade on that one. And again, this only took maybe a day, and he's already hit his profit target. So I think you could optimize the entry here a little bit. He has already trailed the stop loss on this one. So he's kind of following the momentum and waiting till the momentum wanes, or at least trailing it in such a way that he's felt like up until this point, the momentum was good. If he's taking profit at this point, maybe, I don't know. I think if it gets above here, it might try and push a little bit higher, maybe here and back up to here. But it's trying to kind of on a short-term basis reverse some of this. So it's going to need to clear here, get above that, make a little push. And if it does, I think it can make its way back up to here, maybe even a little bit further. So that's my overall analysis on this one here. So what did you think about this? I give it pretty much, I would give it an A trade. In terms of his entry accuracy, I think that was fantastic. I think stop loss placing can be a little more refined. And I think he could have been a little more optimized in terms of taking profit, but it's his first live trade. And that, for your first live trade ever with real money, with all the nerves he's probably dealing with, to get a really precise entry that pretty much never went into negative, so pretty much straight into profit from the beginning, to not only take profit a couple times, but then to add on to a trade. Most beginning traders, after they get a winning trade, they're closing that trade and they're feeling like, yeah, I got a winning trade, and feeling good about themselves. And I think that's great, and you should do that. And what's he thinking? He does this, and then he's thinking, wait, I see more opportunities. He's like ready to attack right away. So he's ready to get back in the trade. And not many people after a winning trade are ready to get back into the same pair, same instrument, same trend. They usually wait for a little bit more kind of change of hands and price action order flow before they get back in. He's thinking, where's the next opportunity? So I like this. He's thinking aggressively. He's attacking the markets without fear and with confidence in his skills. So when you put all that together and the fact that you reattacked it, I think this is definitely worth an A on this one here. And so congratulations to Thomas on this one. This is your first live trade. This is also your first time appearing in this. So congratulations to you. I think it's a very well job done. And I think you did great on this one here. So super proud of you here. So with that being said, I hope you enjoyed this video. I hope you learned from it. Did you find this trade opportunity yourself? If not, why not? It was a very clear setup. Many of our members had taken this setup and they all profited from it. And so if you missed it, why was your strategy missing such a really good trade setup on this one here? And why haven't you been attacking this trend as it's been progressing? So if you want to learn more how to trade like this, check us out, secondskiesforex.com. Other than that, make sure to smash the like button below. Leave a comment for us. It really helps out our channel with the YouTube algorithm, continue growing, continue doing videos like this. So I hope you enjoyed the video. I look forward to your comments and feedback, and I'll see you in the next one.